Good morning. This is Dr. Singh, Associate Professor, Mount Carmel College, Bengaluru. It's indeed a pleasure to be a part of this webinar series, which is being hosted by Sangoli Rayana College of Belgaum under the Rani Chennamma University in collaboration with Mount Carmel College. I would like to first of all congratulate the PG Department of Commerce of the college for having taken this initiative, which is so much needed in this time of pandemic and lockdown, so that the student community and the academic community could get a better perspective of the crisis and its economic implication. I would like to share my PPT. Uh, my topic for the day is about the emerging trends in the post-COVID era and policy responses. I strongly believe that economic history in the coming years is going to be written as AC and BC. BC being before COVID and AC being after COVID. That is a clear indication of the fact that we are living in the darkest times in economic history. The world has never witnessed any crisis like the way it is seeing today. According to the IMF, the global GDP is expected to drop by around 3%, and the global trade, according to WTO, might see a fall of around 32%. Now, obviously, if you're looking at some drastic falls in your economic data, we are heading towards a period of large-scale unemployment. Loss of jobs is going to be accompanied by rising inequalities and poverty. So the human and social tragedy that's going to accompany this particular economic crisis would be unprecedented, probably worse than what we had seen in the 1930s Great Depression. So that is what makes this the worst crisis in economic history. The recovery path, which in economics we say could be a U-shaped or a V-shaped, is not going to be very easy. It's going to be extremely challenging. It's going to be a slow recovery process, and it requires a great deal of coordination between the three pillars in your economy. That is your government, the corporates or the private sector, and the community. I would like to take you through my presentation by looking at what I foresee would be the emerging trends in the post-COVID era, particularly from the global perspective, and then moving on to India specific. I think the first emerging trend, if I look at it in the global scenario, is the fact that the nation state has become extremely powerful. The crisis actually told us that the markets are not in a position to handle a macroeconomic, uh, bombarding that happened due to the pandemic and lockdown. It is inevitable that the governments step in and use their monetary and fiscal policies in order to give the necessary support for the economy in the initial stages, and of course come up in a bigger stimulus package in order to ensure the revival of these economies. So, although how much ever we would be critical of the government's role in economy, I think we need to accept now that the powerful state is there for staying. It's going to be very, very intrusive, and they will have a very critical role to play in any economy. You would call yourself a capitalist or a command economy, but we cannot deny that the state is going to be very powerful. The second trend is the rise of economic nationalism. I think one of the fallouts of the pandemic has been that there is a growing sentiment of localization and anti-globalization. So are we going to see the walls of protection going up across the world, which would imply lesser trade, which would also mean the end of multilateralism? Although the sentiment today is very strongly anti-globalization and in favor of localization, I do not see the end of globalization, largely because today we are living in a highly interlinked, interdependent economies. Look at the global supply chain. It cuts across borders. So to expect these kind of supply chains to disintegrate and for production to become localized is not really a practical thing. For example, Your Airbus, to manufacture one plane, sources its components from around 72 countries. So, can you imagine breaking up or disintegrating that kind of a supply chain? So, that is not feasible. So, what I'm trying to emphasize is we have to accept that globalization is here to stay. What we are probably going to see is a change in the face of globalization. Hopefully, it will come up with a much humane face. That is what we are probably going to be heading towards. The next emerging trend is, of course, China itself. There's been so much written about China of late because of the fact that it was the center of the origin of this particular virus. But I think what is more important for us is, what does the economic future pan out for China? China is a country which has been driven by immense political and economic ambition. They are all out to occupy the center stage when it comes to world economy. The kind of growth that the economy saw from 1980 has ensured that it has a large reserve of dollar, which amounts to around $1 trillion, which gives it that kind of an ability to step forward and dominate the world economy. Unfortunately, this pandemic has also seen the weakening of the leadership of America as a global leader. Now, if the very fact that America was not in a position to come forward and provide the leadership for the world during this kind of time of crisis means that China is in a position today to occupy the center stage. There's been a lot of negative sentiments about China, but would this mean that foreign capital and foreign investment will flow out of China? I'm not really sure, because the biggest advantage for China is the fact that they are a communist regime. Policy making is very quick. They have managed to build amazing infrastructure. There is a great deal of ease of business in that particular country if we overlook the human rights record. So that means FDIs and foreign capital will continue to go into this particular country. The movement out of China would be probably more in the long term if all the countries come together and collectively take a decision that we don't want to get into the dragon land. Uh, but China is going to go and throw around its weight around the world today. Look at the way they have banned the imports of beef from Australia, because Australia was one of the countries which questioned China with regard to the origin of the virus. Look at the way we are having a standoff on our borders with them. So, this is a clear indication that China today is going to be much more aggressive when it comes to protecting its political and economic interests. The other thing which China is probably going to do in a bigger way is what we call as the debt diplomacy. In 2013, China launched one of its most ambitious projects called the One Belt, One Road initiative, whereby it was trying to connect around 50 odd countries for building its own investments and trade. Now, this has largely reached out to the African and the Asian economies. Now, look at the scenario most of these countries are. They all are going through their worst economic crisis. They do not have sufficient capital to infuse into their economy. Now, this is where China will step in. China will use its huge, abundant dollar reserves to give loans to these countries. That in turn will generate more, opportunities for the Chinese companies itself. So it's a give and take which will benefit the China. But this economic diplomacy is something which is going to strengthen China's foothold, in particularly in economies which are going through a severe stress. So China is really the country to look out for. China is the country which probably will now dominate the economic center stage for quite some time, although everybody is so apprehensive about the Chinese of late. Now, coming specific to the economic trends, I think the pandemic is really going to push the manufacturing sector towards greater automation. This is inevitable given the fact that the pandemic has brought along with it new rules and regulations in terms of social distancing, in terms of the number of people who can be there on your plants. So, what we are probably going to see is the industry will react with opting for greater automation because that would make more sense for them. like Hyundai, for example, when it had to shut down its plants in China in February because of the pandemic. And when they reopened, first of all, they moved a large chunk of their production back to South Korea. And secondly, they decided that they'll opt for greater automation. So this is just the beginning of that. The second trend, I think, which everybody is now familiar with, is the work from home. We are looking at work from home, which was an alien concept to most of us, which was more associated with the IT industry. It's today something which everybody is into. So this is going to become a part and parcel of a normal economy. But I personally feel the work from home requires a great deal of performance or productivity parameters so that it would not affect the efficiency and the overall productivity of companies. But for me, from an economic perspective, the work from home is a greater cause of concern because it disturbs our circular flow of income. The very fact in a city like Bangalore, majority of the people are today opting for work from home has meant there is no business for our cab aggregators, the auto walas. There is no business, or there will be no business for your hospitality industries. There will be no business for something as small as your repair shops, your puncture walas and all. So we are looking at how there is an ecosystem that is highly interdependent, which has built when you and I walk out of our houses and go to office spaces. But the work from home is going to disturb that entire model, which means it will wipe away a lot of other small jobs that would be existing. This, I think, is a cause of concern, but it's purely from an economic perspective. But I think it's inevitable that the model of work from home will be adopted more and more, uh, at least in the shorter period, because of the impact of this particular crisis. The world is definitely going to see a greater migration from offline to the online platforms. We are going to see an exponential rise in e commerce, digital banking, online education, online entertainment, telemedicine. So I think that we are heading towards a phase of greater digitalization. Now, this greater digitalization would obviously mean a lot of our jobs would never come back. Say, particularly jobs in your hospitality industry, in banking sector, even probably in education. So, what would be the impact of this greater digitalization that we are seeing? According to a survey, the usage of ATMs has come down in the last 2 months because more and more users are opting for digital mode of payment. You also have a scenario where people's consumption of the digital platforms of entertainment has seen an exponential growth in these 2 month period of the lockdown. So we are heading probably to a phase where, remember, the single screens died away 10, 15 years ago, giving way to multiplexes. And 2020 will probably see even the death of the multiplexes because more consumption is today happening on online platforms like Netflix and Amazon Prime. So that is going to be the future of entertainment. So whether we like it or not, digitalization is something that is going to be there for us. But I think one of the sectors which is going to be greatly affected by this is the retail sector. We had seen a boom in shopping malls in metros and the two-tier cities in the last 15 years, largely because of the growth of the economy and also because of this consumeristic pattern that had set into our economies. This, I think, is going to be worst hit because of the pandemic and lockdown. So the retailers, the big retailers, will have no option now but to look for a movement from the traditional brick mortar model to a digital platforms. But also remember, if this is going to happen, we are heading towards a major loss of jobs because the retail sector was one of those sectors which had huge employment potential. But let's accept it. We are heading towards more and more of online mode of economic operations, and that is here to stay. My next economic trend I would like to focus is on the consolidation of the hold and the power of the big giant technology based companies. Think of it, the Google, Apple, Amazon, Facebook. These are the companies which are going to become much, much more powerful after this 2020 crisis. The kind of capital that they have, the kind of market valuation that these companies have, and most important, the data that they control is going to make them really powerful. We are looking at how these companies, worth of these companies is much more than the total market valuation of the Indian market, stock markets. So imagine the kind of capital that these companies are going to be are having, and what are they likely to do with this capital when they start spreading out across the world. We are already seeing it. The Facebook investment in Reliance Jio, the much speculated Amazon investment in Airtel is a clear indication of how the technology-based companies are the ones which will now be entering worldwide across borders and dominating the business operations in most of these economies. Is this something to fear? Yes, because they're going to have a great deal of data under their control. And secondly, I think it also is a signal of how there's going to be a greater consolidation of economic power and income, contributing to greater inequality. According to reports, Jeff Bezos, the owner of Amazon, is going to be the first individual who will be $1 trillion worth. So that's a clear indication of the kind of economic inequalities that we are going to see if these technology-based companies are going to become more and more powerful in the coming days. The next economic trend I would like to be looking at is the change in the consumer psychology. I think one of the joys of this particular pandemic and lockdown has been the fact that we woke up to the birds chirping, our skies looking much bluer, the rivers becoming cleaner, the air we breathe becoming more fresh and clean. How long will that last? I'm not sure, but that's something that we enjoyed. But we also realized the joys of simple living. So one of the things that we would see is that the end of consumerism, the unending consumption pattern or the binge consumption that we all were into because of the demonstration effect, because of the retail boom, that I think would take a hit in the coming months and years. We would also see a shift in the consumption pattern. People are going to become extremely conscious. They're probably going to be spending much more on wellness and health. So, for example, Dabur Chyawanprash saw its highest sales in April and May, which is a clear indication that crises like these indicate to people the need to focus on themselves. So, wellness and health industry is something which has a huge potential for growth, and that is where a lot of investments would be going in the coming years. The third trend with regard to the consumers is that a lot of us would start shunning public transport. Given the fear of the pandemic, at least till the vaccine comes out, the preference for personal transportation would increase. So, which is okay, which is good news for the automobile industry, which has really been on a downslide. So, personal transportation is something that would be of a greater focus in the coming years. With regard to the global trend, one of the last trends that I would be looking at is probably what happens to the environment. The environmental norms, I fear, would be compromised by most of the economies to revive the economic growth. The slowdown has been across the countries. So now, if we are looking at economic revival, investments have to pour in, and for investments to pour in, we have to overlook stringent environmental laws that we have. For example, Government of India has already approved certain projects in forest regions. Although this has raised an alarm, this is a period of crisis, and most of us would overlook the fact that this has been allowed also. So that's exactly what I meant when we say that we will compromise on our environmental norms. We are also going to see a slowdown in the renewable energy sector, largely because of the sharp decline in the oil prices that we have witnessed. This could also come as a blow for the electric vehicle market. I'm not saying the electric vehicle market is not the future. It is definitely the future which we all have to embrace. But the crisis might slow down the boom that was expected in the EV market to a certain extent because of the downslide of the oil prices. That part of my presentation was largely dealing with what I perceive as the global emerging trends. Now, coming to India specific, The 1991 reforms marked the beginning of the retreat of the government in a large sense, in the sense we embraced market economy. But 2020, the wheels have turned. The government is back with a bang. When I say the government is back with a bang, imagine putting 1.3 billion people locked up. That's exactly what the government did. The lockdown showed the power of the state when it told its citizens to stay at home, and we all abided with it to a large extent. The lockdown also created the economic crisis, and whom did we turn to for the revival and renewal? It was only the government. So the government being all powerful is something that we all need to accept today, as we are turning to the state itself to help us to come out of this particular crisis that we are into. The 20 lakh crore stimulus package, which the government has announced, has basically got three components. We have the direct government spending, we have the bank credit that is being pushed into the economy, and of course the rate cut and lending by RBI to the banks and NBFCs. So the stimulus package, to a large extent for me, shows the power of the state. Anytime if you're looking at an economic revival, it has to be driven by the state. Now, how did the government go about in terms of its stimulus package? Of course, the RBI is the one which is infusing liquidity into the economy, but I think the larger focus also has been to ensure that the welfare measures are in place. There is some kind of a direct cash transfer that is going, whether it's to the farmers, the poorer, the women, the old, and the needy. To reach out to these segments, the government has used the delivery architecture, which is largely based on JAM. J is for Jandhan, A is for Aadhaar, and M is for mobile banking. Crores and crores of rupees have been transferred. Of course, there are leakages in this particular delivery mechanism also. They have its own limitations, but I think it has been a very great experiment that we have seen how the direct cash transfers have gone through this particular JAM model. What is the likely trends in the coming years? I think the first one is government really needs to focus on the welfare, because this pandemic has shown us the poorest and the marginalized continue to be deprived uh, of their basic necessities on a day-to-day basis, more so during a time of the stress. So when we talk of welfare focus, I think one of the things that the government is going to do a lot more is the direct cash transfer. We've had direct cash transfer in the case of fertilizer subsidies. We've had it for our kerosene. We've had for our gas cylinders. Even your student scholarships is coming through the direct cash transfer mode. I think this is the mode of delivery which is going to be strengthened in the coming years. There's been a lot of talk of universal basic income scheme, which is what the Western economies have, which is nothing but like an income dole that you give out to people when they're unemployed or if they are poor. But for a country of our size, whether we can implement this is going to be a challenge, but definitely policy makers will have to start thinking on those lines. The one nation one card ration card is something that was spoken about a lot, and it's really heartening to see that the government has finally decided to move towards that, because that would be a great help for the migrant population, and in today's context, labor moves across states. So the one nation one ration card is something which is commendable. I would also feel that this is the time to look at a smart card for labor. We need to have a registry of all the labor. We need to have a smart card for the labor. This is going to ensure that certain basic amount of support and compensation is reached out to the labor. And of course, this is also in keeping with the social security norms. So we have to move towards that thing. Uh, from a purely economic perspective, this particular crisis has meant that the government of India has to come and open up its treasury. Uh, but unfortunately, this is also a period of crisis, which means that the tax revenue of the government is seeing a huge fall. So we are heading towards a period of widening fiscal deficit. India introduced the FRBM Act, which is the Fiscal Responsibility Budget Management Act, in 2003. And this particular act laid a roadmap for the Indian government to reduce its fiscal deficit to 3%. But we've already at 3.5% fiscal deficit last year because of the economic slowdown we were going through. Currently, the fiscal deficit is already at 4.2%, and it's predicted to get worse and hit 6%. Now, this widening fiscal deficit is a huge cause of concern because it would mean that the credit rating agencies would downgrade India. And once Indian economy gets downgraded, the inflow of capital would come down. And inflow of capital coming down would obviously have multiplier effects on your economy. So, but the kind of crisis that we are right now in makes it extremely difficult for the government to not to not borrow, and as a result of which, the fiscal deficit is bound to widen up. So we probably will have to forget the FRBM Act for a couple of months or even years. And we're also heading towards a period of what we call in economics as monetization of deficit. Now, what this means in simple words is in order to cover up the gap between the revenue and expenditure which the government is facing today, the government will have to make the RBI print currency, or the RBI will have to enter the primary market and buy the government securities. Now, whenever this happens, it would invariably mean an excess money supply in the economy. Now, we know economies have a great deal of bottlenecks, and as a result of which production will not be immediately seeing a jump when money supply in your economy increases. As a result of this, we will be heading towards inflation, or we will see a sharp depreciation of the rupee. The rupee has already been on a downslide in the last 3 months. Now, if the rupee is going to slide further, that wouldn't mean our exports would pick up because the export market is going to take a long time to recover. The only saving grace for us is our import bills might not register a sharp rise because the oil is still on a downward trend. So this pump priming, which the government is going to use as a tool for it to finance its stimulus package, might actually see the fiscal position of the government weakening to a large extent. Although in the short term, most of us seem to be overlooking that fact and emphasizing, no, the government should come and spend. I think in the long term, this is going to have a huge impact on the economy in terms of its creditworthiness, in terms of its the inflationary pressures, and in terms of the rupee value. One of the other trends, which is a fallout of this particular pandemic, is the economic federalism has been under tremendous stress in India. India is a union of states, but the state governments in the last few years have been under tremendous economic pressure, largely with the introduction of the GST. Now, with the introduction of the GST, the states became more dependent on the central government for their share in the GST revenue. The states also lost out on their power to tax a lot of commodities. Now, during the pandemic and the lockdown, the states saw their treasuries coming down to practically zero. And this is what made their dependency on center increase. The central government, of course, has allowed the state governments to go ahead and increase their borrowing capacity and ability. But given the fact that the revenue crunch is going to be across Government of India and the state governments, we are going to see greater tug of force between the central and the states in India. The other trend that is I think I'm looking forward is, are we going to see a pattern in the growth engines of the Indian economy? Now, growth in India is largely being driven by the so-called progressive states of South India and the Western India, that is Gujarat and Maharashtra. These were the states which have contributed the maximum to India's GDP. But India's population is the larger percentage of our population is concentrated in the Hindi heartland, or what was called in economics as the Bimaru states. We have seen during this reverse migration the dependency of the progressive state on the cheap labor that comes from the Hindi heartland. Now, with labor going back, The northern states have a unique opportunity to leverage their demographic dividend. Remember, the southern states have aging population. We have a shortage of labor in most of the southern states. The northern states are the ones which have a larger young population. It is now a time for the northern states to leverage this demographic dividend. If they can fix their law and order, if they can go ahead and make investment in infrastructure, particularly in social infrastructure of health and education, they could actually be the next favored investment destinations, and that would contribute to new growth engines emerging in the economy. Um, the next trend, which I think is not really great news, is the fact that the banking sector is going to see bleak prospects in coming days. The banks have already been under stress because of the rising NPAs, but today, with the banks being at the cornerstone of the stimulus package, they have been told to ensure that there's a loan recovery moratorium given. They've been asked to cut down the rate of interest. It's going to be extremely difficult for the banks to recover their loans in the coming months and years, which in simple words means the banks will have more and more of bad debts and the NPAs will rise. The loan defaults are going to be something which I think everybody knows is going to be there. So, with this, what is the way out for the banks? Because the banks are at the cornerstone of this entire stimulus package which is being pushed by the government. And if they are not in a position to recover the capital that they are lending out, they will definitely see a they will definitely be under stress, and the banks will be facing bleak prospects. So what are we heading to? We are probably heading down to more banks shutting down. We are probably heading down to a period where we'll have consolidation of banks and we'll see the emergence of large banks, which we have already seen in the last few years. Recovery, I strongly believe, has to be pushed by the informal sector and by agriculture. When it comes to the informal sector, we have around 65 million enterprises operating in India, out of which only 4 million enterprises are registered. Please remember that the stimulus packages offered by the government will be reaching out only to the registered firms. So, what happens to the 61 million other enterprises who are not under the purview of the stimulus package? So here we are talking out of small units which are probably making agarbattis, the candles, the hawkers on your road, it could be the cobblers, it could be the laundry shops. These are the ones which are actually under severe stress now. Now, we know that the government announced the packages in May, but nothing much has happened on the ground. So it is this efficiency and the speed of the delivery of the economic support, yes, to the registered firm, that is important, but also to the unregistered firms. So I think now it is important for the government to look out as to how are they going to reach out to these millions of enterprises, which is what makes our economy move, but they are not under the purview of the government support. They have to be reached out to. It's extremely important at this period. Of course, we are an economy which is highly dependent on agriculture, at least in terms of jobs. The government has used this particular crisis as an opportunity to push for certain reforms in the agricultural sector. We have already had ordinance being issued by the central government last week, which has now resulted in the end of the APMC Act. So we are probably heading towards the end of our regulated markets. We are seeing amendment being made to the Essential Commodities Act, and of course the introduction of the contract farming. So what would this imply? I think for me personally, agriculture problem has never been related to production. We have been a largest producer of a lot of agricultural products. The problem has largely been linked with marketing and distribution. Now, these three reforms which the government has announced, actually, in simple words, would open up the markets for our farmers. The farmers would no longer be obligated to sell their products to the registered traders in the APMC yards. The farmer today will have a freedom to sell his product to anybody across India through the eNAM portal, that is your Electric National Agricultural Market. And that would mean he would be able to get a better price for his products and also remember larger markets for his produce. The Essential Commodity Act amendment was much needed because during a time of oversurplus or during a time of excess production, the farmer was at a loss because of the restriction placed on the holding of products, agricultural products for your food processing industry and traders. Now, with that being removed, the excess production or a surplus production would find its way into the agro processing industry, protecting the interest of the farmers as well as the industry. The contract farming, yes, there is a need for caution because we are a country with largely small and marginal farmers, but this is where the farmer producer organization could come in. Any negotiation between the farmer and the corporate should be through the farmer production producer organizations or the FPOs. So you would be able to protect the farmer's interest, at the same time ensure there's a better flow of inflow in terms of credit, seeds, fertilizers, technology from the corporate sector. And the biggest advantage of contract farming is that the farmer knows there is a buyer for his product at a predetermined price. So the reforms announced in agriculture are something which is welcome, and we hope that they would have a greater impact on market and distribution in addressing the market and distribution problems of the sector. But also a word of caution, agriculture is a state subject, so a lot of this to be translated on ground would require a great deal of support at the state government level. So what is the way ahead we are looking for in terms of policies? There's been a lot of talk about how India can step in and occupy the space which China would probably give way in terms of the global supply chain. Is it possible? I think we're just being overambitious if we think we can just take the center stage in the global supply chain, because we are an economy with a lot of deficiencies. So we need to address these deficiencies first. The first problem that we are having is that of policy inconsistency. We've had a lot of legal battles being fought out because the government seems to keep changing its taxation policies, putting the international corporations or MNCs under tremendous stress. These kind of policy inconsistencies should end. We have to have greater transparency in the way our government functions. The single window system should actually be a single window system because that is so much important for the industry. We also have to ensure that the ease of doing business is strengthened. Yes, we have seen a jump of India from 177 to 134 on the ease of doing business, but that's not sufficient, because at the ground level it is still very difficult for an investor to get clearances from innumerable departments, to get his connection of electricity, water, and just the small basic issues, because that is something which is very, very critical for us to become a favored investment destination. The other deficiency that we have is largely to do with the factor markets, that's the labor and land. I strongly believe that labor reforms are needed. We need to look at it. Don't look at labor as a sacrosanct thing and we shouldn't introduce reforms. We need reforms because that has been a stumbling block for us. But at the same time, as we are introducing reforms, we should not be compromising on safety and health norms. That's something that's very important. But labor reforms, although state governments have taken the initiative and gone ahead and announced, we know there's a great deal of opposition for that. But I think we have to be much more rational, and we have to think of the situation we are in, and we need to push for labor reforms. At the same time, emphasizing again, protect the labor interests, particularly don't compromise on the health and safety norms. The third factor that I think which India needs to address is the land. Whenever investments have come into India, the biggest challenge they have faced is the acquisition of land. Land is an emotional issue in India. It's going to be extremely difficult for us to acquire land for business propositions. So government needs to tap its massive land holding that it has with railways and the public sector undertakings. Release these lands for businesses. I think that is the way forward for us. In economics, we believe everything boils down to demand and supply. So if you're looking at a recovery, the focus area should be on stimulating demand and boosting supply. So how are we going to go about with this? This is the time for the government to come forward and undertake massive public work program. Do you want to go back and revisit the PPP model? It could be done because, as I told in the beginning, this recovery has to be based on a collaborative effort of government, industry, and community. So the PPP model could be used to make investments in public works program. Go ahead and build roads, bridges, schools, airports, but bring in massive investment, because that will lead to generation of jobs, and that is what is going to lead to revival of demand. Use your Manrega to build productive assets in village level, because that again is going to contribute to adding on to your economic infrastructure and contributing to, of course, jobs and revival. The second area which I think requires a great deal of investment is health and education. The pandemic has exposed the weaknesses in the public health system, but at the same time, I need to accept that the public health has risen to the occasion, and it has reached out to the millions who are going through this particular health crisis. But we also need to realize that we need to make bigger investments in health. We also need to make investments in education if we want to leverage the demographic dividend that we have right now. MSMEs have to be the cornerstone of the revival. If we are looking at filling up the China gap that is going to emerge in the global supply chain, if we are looking up at ensuring the Atmanirbhar Bharat Abhiyan is going to be successful, we have to go back and revive those lakhs and lakhs of MSMEs which have been under stress largely because of the Chinese onslaught, the demonetization, the GST, and now the pandemic. So it's not just in terms of providing financial support, it's also in terms of ensuring that they have a, a fair playing ground without much of government license raj and interference in their day-to-day functioning. Lastly, and I think extremely important, the crisis is now going to put immense pressure on the government to strengthen its welfare schemes. And it's inevitable that we should build a welfare architecture which is technology driven. This would ensure that the welfare programs reach the target audience, there is less of leakages in the system, and also there is a need to ensure that the JAM, Jandhan, Aadhaar, and mobile is strengthened further. So, if technology is made a part and parcel of the welfare delivery, we are probably going to increase the effectiveness of the government's welfare programs. In conclusion, the pandemic has changed the way businesses operate and the way economic policies are being made. We are heading towards a period of uncertainty, there is no doubt about that. But always remember, crisis is also a period of opportunity, an opportunity to reinvent and move ahead. So I am still optimistic despite the bleak, grim situation we are in, that if the three cornerstones of any economy, government, private sector, and the community come together, we could be in a position to overcome this particular crisis and move ahead. Remember, worse periods have come in economic history, and mankind has had the ability to recover. So I hope the path is there ahead for us, which is much brighter and more equitable and to all of us. So I would like to thank the organizers for this opportunity, and all the best to each one of you. Stay healthy, stay safe. Thank you.